It was good news, bad news and nothing new from the US yesterday as ADP surged, GDP tanked and the FOMC statement confirmed further tapering at the same rate. But how is market sentiment holding up amid this heavy policy week? Shin Kadota is down the line to share his insights. Shin, in what's been called the biggest shocker for some time, US GDP missed for Q1, coming in at a mere 0.1% when the market had expected a 1.2% rise. But while the US economy didn't grow in Q1, nor did it decline. So should alarm bells be ringing here?
So the weakness in the first quarter growth in the US economy was broadly expected by the market, but the magnitude of decline was larger than most of us expected. But looking at the components, actually, the personal consumption held up pretty strongly at 3.0%, but there are some temporary factors like healthcare spending and utilities spending that are not likely to continue into the second quarter. And also elsewhere, investment in the net export deteriorated sharply in the first quarter. So we remain of the view that the U.S. fundamentals are strong and economic recovery should pick up as weather impact wanes, but there's some downside risk as well looking into the second quarter.
Anyway, policymakers didn't seem too concerned as weather continues to be cited as the main reason. But is this still really a viable explanation?
Indeed, some of the weakness are indeed attributable to the bad weather, but there are also some other factors that were probably in play. For example, there was a huge decline in capital investment, and also there's some weakness in the government spending as well. And these factors are probably not only due to weather, but there's all other factors maybe in play. So we need to watch carefully the monthly data going forward, especially the U.S. employment report to be released tomorrow.
Overall, the statement didn't change much from the previous, merely mentioning that economic activity has picked up recently after having slowed sharply. Subsequently, the market reaction was rather non-existent. Perhaps the main takeaway was that this decision was unanimous. What do you think?
The decision was unanimous, but I think that this decision was rather easier than the one that was made in March. So, for example, this time FOMC decided to taper $10 billion, which was well priced in by the market, and the statement was a little changed. Just mentioned some changes on the economic assessment. So, in the last March FOMC, President Kadota dissented, but that was on the change in the forward guidance. So I think this one, inherently had little possibility for surprise. FOMC has already explained its plan for QE3 tapering, and the March FOMC, as I said, they decided to go for more qualitative forward guidance. So there is not much to be done at this point until there's more clarity on the fundamental development after the weather impact wanes into the second quarter. So they're kind of wait and see on how the economy is evolving right now.
Earlier this week, yen traders seemed to be disappointed with the Bank of Japan's decision to hold pat on their stimulus. Do you think they will have to expand policy this year to reach their targets? And as we look ahead now to Friday's NFP, how are you expecting the dollar-yen to hold up?
As you said, the BOJ kept their monetary policy unchanged this week and maintained their outlook for achieving the 2% inflation in 2 years in their outlook report. This did indeed push back some of the market expectation for early additional easing. However, we continue to expect BOJ additional easing to be commenced in July monetary policy meeting, as we expect the inflation will undershoot the BOJ's expectation. So we do expect the BOJ to increase monthly purchase of JGB by 1 or 2 trillion yen and ETF by 30 billion, and that should help dollar yen higher toward our target of 105 by summer. So that's how we expect the Dow. And also, importantly, as I said earlier, the U.S. economic data are closely watched, especially for this tomorrow's Friday's non-farm payroll, which we expect to be 250K, and market is expecting also a strong number. So there may be some downside surprise, could lead to a bigger market reaction than the positive surprises given already high expectations. So both the U.S. data and the BOJ are on focus for Dow yen.
Shin, thank you so much for your time and insights today. Well, viewers, that's all from me for the moment. Ben Jones brings today's press review looking at potential criminal charges brought by the US on 2 large European banks. So make sure you click back for that. But for me and for now, it's goodbye.